Okay, guys, let's continue with this trying to identify the trend, the best possible way to identify the trend of the market. So let's say you come across the market, and then you see something that looks like this, and then now you want to trade this thing, but now you do not know if you should be buying somewhere, you should be selling somewhere, but this is what you came across with. But you can actually see that everyone can see that this thing it's kind of going towards the downside. So what is it? This thing is a downtrend. But the downtrend can only be the downtrend if you can be able to identify the lower lows and the lower highs, the lower lows and the lower highs, the lower lows and the lower highs. Because if you can't identify such points, therefore, which means you are wasting your time, because this is the only thing that will give you a clue to say, now you can sell, now you can buy, now you can sell, now you can buy. Because if you can't identify the trend, then which means you are setting a trap for yourself. Okay, so it is gonna be for me. I can be able to do that simple while the chart is looking like this. But for you, if you're still trying to figure out how to identify the trend in the market, how to spot the higher highs and the higher lows of the main structure. Remember, we are dealing with the main structure. We are not yet dealing with the substructure thingy. So the substructure thingy, we're just gonna leave them out. So earlier on, I said if you have a trend that looks like this, the moment you identify that okay, this was your low and then this was your high somewhere here, and then you come again, you identify maybe this point is your low right here, and then you're expecting the market to be going all the way up maybe to this point right here. So whatever that is going to be happening here, whatever thing that is going to be happening here, as long as it has not yet broken below this point right here, it can't be the new lower low. The market has to break below this previous point for us to be like, okay, so now which means this is the new lower low. So anything that is still within this structure, you do not have to confuse yourself with. Don't confuse yourself with, because it's very rare that you would find a structure which it's like this clear picture like this and go down. It's very rare. So hence I'm saying, like, if you do find something that the market starts doing consolidating, maybe in between doing things like this, do not stress yourself. Do not try to mark these points right here, because now we are still on lower low. This was a lower high, and then this was a lower low. Leave the market to play around. It's fine. Leave it to play around until the market breaks below this point right here. Then you would know that okay, so which means this was the lower high, and then this was your what, your lower low. It's gonna be difficult for you to see this under on the smaller time frames, because on the smaller time frames, this is the kind of an information that you're gonna see. You're gonna see something that looks like this. But when you go to a higher time frame, you find out that maybe it's at on a higher time frame, it does not have a lot of place, because remember, if we're in a 5 minute, comparing 5 minute and a 15 minutes, 5 minutes has got like three candles, and then 15 minutes has got what, one candle. So it's going to minimize a lot of noises. So you might find that on a higher time frame, maybe it gives you something slightly simple, and then before it goes down on a higher time frame. So try by all means to figure out the direction on the higher time frame, so that you can make your life easier when you go to a lower time frame. Lower time frame has got a lot of noise. Okay, so like in this case right now, let's say if we were to identify the structure, if we were to identify the structure right here, it might be a bit difficult for us to do it on this time frame unless you are experienced or you already know what you are dealing with. Then you can be able to do it. You see. So now we're gonna move, because chances that you might be like, okay, this is the lower low, lower high, okay, lower low, lower high, lower low, and then starting to be confused, maybe somewhere here, come here again, now you are here, now you are there again, now you are here, now you are here. Now it end up looking more like this market was in a consolidation form, because for someone who can't really read the charts, and then you gave them something that looks like this. Some people will be like, okay, you know what? So something like this you can't really trade because the market was in what? The market was in a consolidation here. So you can't trade something that looks like this because it's you who identified or who named or who tried to analyze the market in a wrong way. So try by all means to do it the right way. If you can't really find the structure on the time frame that you are currently in, try to use the higher time frame. Just go above slightly one time frame higher and see is there any simplification on the structure that you get. Like ourselves right now, this is a daily time frame, so we're gonna go to a weekly time frame. So when you go to a weekly time frame, we see something that looks like this. Okay, so if we do see something that looks like this, it's kinda making a bit of some sense. Even if you can try to, even though you are not that good as yet, maybe you say impulsive, you say correction, maybe you do say again impulsive, correction, impulsive, maybe correction, and then you say impulsive, correction, maybe again you say impulsive, and then you say maybe correction. Yes, it's not that perfect as yet, but someone can already see that okay, this is now in the what? In the downtrend. Someone can be able to see that these are the lower lows and then these are the what? Are the lower highs. So it's kinda trying to to simplify your life. It's better. It's better than being able to try to figure out what's happening on the daily time frame because in the daily time frame it had a lot of noise. Okay, so these are the things that I want you guys to get used to checking them. These are the things that I want you guys to get used at checking them to simplify your life because the more we move with this structure is the more we're going to try to blend in the information together. You see, it's the more we're going to try to blend in the information together. You see, so, but on a weekly, on a monthly time frame, you see the more you go higher time frame, it starts to make things even more simple. So you can be able to draw that. Oh, okay, so this is a downtrend. Okay, this had some noise, but this one is better. Something like that. Okay, so we're gonna try to look for another chart so that we can explain the very same thing so that it can sink in because from here now we're going to be going to the what trying to do the examples of the actual chart analyzing now from the higher time frame to a lower time frame because you moving from the higher time frame you should be moving from let's say from using the weekly as your highest time frame you should be moving from a weekly time frame going towards the downside already knowing that we are currently in an impulsive phase or we are currently in a correction phase. Doesn't matter of an uptrend or a downtrend, but know that we are in a correction phase because you understanding that, let's say now we have an uptrend that looks like this. Let's say when you go to a weekly time frame, you will see something that looks beautiful like this, that looks like this. You should be able to know that okay, maybe let's say let's put it somewhere here. So you having something that looks like this, you should be able to say that okay, this was the higher high, this was the higher low, this was the higher high, this was the higher low. So you starting this or seeing this in a weekly time frame, automatically in your mind you would know that oh the market is currently in a what? In an impulsive phase of the weekly time frame. So which means the buying power is stronger. Even if when we go to the lower time frame, if we can get a buying opportunities, we can take that buy and hold for a very long time because you know that the weekly time frame is still pushing, is still in an impulsive, is still gonna push this market to the upside. It's very, very, very important that you can be able to identify your structure based on the higher time frame because you starting analyzing your market from a 1 hour time frame you might find that maybe somewhere here maybe in this structure right here maybe it's something that looks like this. For example, let's just say for example what you see here on a weekly time frame when you go to a lower time frame. I'm just trying to show you the danger of starting from a lower time frame or not understanding what is happening on a higher time frame. So when you go to 1 hour what is happening here. Maybe you find something that it was like this initially, but now it looks something like this. Yeah, well, let's say this it looks like this from a lower time frame, and then you are coming be like, okay, this was a higher high, higher low, higher high, higher low, higher high. Now the market has broken below this point. Now the market is going towards the downside, so we're gonna sell all the way to the downside, only to find out that the market was just giving us a slightly correction or a pullback, and then the market still carries on because the weekly time frame says we are in an impulsive phase. So something that is on a weekly impulsive phase, obviously it has power. It's going to be powerful. It's going to go more up. So if you're going to not try to figure out if the market on a higher time frame is in an impulsive or in a correction, therefore you're still going to make a lot of mistakes. It's very, very important for you to identify the structure, higher highs, higher lows, higher highs, higher lows of the highest time frame. Okay, and it's easier for you to figure out such grades, such higher highs, higher lows, higher highs, higher lows on a higher time frame because there is no noise. Hence, I was trying to say that starting from a lower time frame, it might give you a little bit of challenge, or there's a lot of noise that's going to confuse you. The very same thing it can happen on the market when it's in a correction phase. Let's say on a weekly time frame, this is what you have: impulsive correction, impulsive, and then the market is currently like this. You know that most of the time when the market is going up, it's going to be retesting the previous high. That's what it's happening most of the time. The market comes and retests the previous high like this. You see. So if you go to a lower time frame, let's say from what is happening right here, what is happening right here in this structure that is looking like this, if you ignore the higher time frame, and then because let's say for someone who started on a higher time frame would be able to know that, okay, this was the impulsive, this was the correction, this was the impulsive, this was the correction, this was the impulsive. Currently now the market it's in a what, it's in a correction. So good chances or good opportunities in this trade are me looking for selling opportunities until the market gets to what, to this point, and then I can start buying. We are seeing this from a weekly time frame, and then you already having programming your mind that when you go to a lower time frame, best trades at the moment or for this week or for today or for so how many or for these 2 weeks is going to be selling opportunities. Selling opportunities, they are more highly, or they've got high chances of playing out. You get me? So let's say you go to a lower time frame, you decided, you know what, I'm not gonna start on a higher time frame, I'm gonna start on a daily time frame. I'm gonna start on a 2 hour time frame or a 1 hour time frame. Some people they even start on a 15 minutes time frame. So when you get there, you find a structure which is same thing, which was started by coming down, and then now you are seeing something like maybe a head and shoulder, maybe something like this. Now you're coming here and be like, okay, yo, this is perfect, yo. I'm taking what? I'm taking buying opportunities from this point right here. I'm gonna be buying all the way to the upside. Now the market is going, it's gonna continue all the way to go to the upside. Of which, yes, sometimes it can work, but just imagine you or that particular trade working out based on luck, because it can play out only to find out that it was luck. And remember, if something was luck and you made a lot of money, you gonna do it again, not knowing that was wrong. Okay, so try to minimize things that are looking like this. So if this was the correction phase, definitely go look forward for selling opportunities in a weekly time frame. Even if when you get to a lower time frame and then you are seeing a head and shoulder that looks like this, which of which is a buying opportunities, don't take it. There's no need for you to rush. Take something that goes in the direction of the higher trend, of the higher time frame. Do not be sold out by what you see on the market if it doesn't correspond with what is happening on the higher time frame. So rather wait. Maybe the market is going to give you a double top not so long, and then gives you a push to the downside, and then now it's giving you a sign of what, of retesting the what, the neckline. Therefore that is a big a good chance for you to take that sell because it has highly likely chances to play out because it's in the direction of the what of the correction of the higher time frame. You see, so those are the things that we need to look into. So hence I'm saying that if you can be able to attend or to master the higher time frame, that okay, this is a higher high, this one's a higher low, this one's a higher high, this one's a higher low, that's a higher high. You've got highly chances of being able to catch the right trades. Okay, so let's just go look for another example. Okay, guys, so this is another example that we're gonna look at. We have a structure which looks like this. Remember, I said if you go to a higher time frame, at least you've got chances of being able to identify the what, the trend. For example, if in this case you start on a higher time frame, and then you can be able to see that okay, this was the high, and then this was the low, and then the market went all the way up because you can't say the market came to this point to this point to this point. This is more like a substructure. I want you guys to be able to see, have a kind of structure, bigger structure, a kind of picture. The one. So this is substructure. So you should be able to see that okay, the market created this high, and then it created this low, and then the market created this high right here. So if you can have a look at this structure, you would see that okay, so if this was the higher high, this can be actually be the what, the higher low, and this being the what, the higher high, the higher high. So there's a highly possibility that again the market is currently in a what, in the correction phase. So in the correction phase, the market can retest here and actually go all the way up. But if you're going to start your analysis from a lower time frame without considering the structure of the higher time frame, you're gonna go to a lower time frame and start doing things like this. You're gonna start doing things that looks like this. Maybe lower low, lower high, lower low, maybe lower high, and then you'd be taking long selling opportunities. You would be still waiting for the market to come to this low right here and be like, yeah, the market is still gonna sell because we are in a downtrend. Yeah, well, but for someone who started on a higher time frame would actually have a picture to say, you know what, this was the a correction phase. So if the market was in a correction phase, this person should be actually be waiting for what, for the market to start reversing and then start taking buying opportunities. You see, that is what I'm trying to make you guys understand, that don't be held or don't concentrate too much on the lower time frame and forget the picture of the higher time frame. Okay, because in this case it's just simple and straightforward. The higher time frame is giving you what, a buying opportunities. But if you're gonna concentrate on this one too much, you're gonna be like lower low, lower high, lower low, lower high. You're gonna be looking for selling opportunities because you feel like this is a what, is the selling is a downtrend. Do you get what I'm saying? As you can play this thing out, you would see you see something that looks like this. You see the market starts going up because why? Because when you're looking at this structure right here, you would have been able to see that this was an impulsive correction, impulsive, and then this was the correction. So even now at the moment, let's say, let's just wait for this market to finish up this replay, you would see what I'm trying to talk about. Like in this case, you should be able to know that if this was the impulsive correction, this market is currently still in what, in an impulsive phase. This market is still currently in an impulsive phase, move to the upside until it breaks this point. It should be going up until it breaks this point. So looking for selling opportunities at this point is not really that safe. Okay, so these are the things that you need to be looking at. Okay, so we're gonna carry on with example to another session. Okay.